It's over! The golden age of meme coins. Dogecoin, Shiba Inu, and all the copycats that promised overnight riches is collapsing faster than anyone expected. What started as jokes became billion-dollar dreams, but 2025 has brought a brutal awakening. Investors are finally realizing that hype can't replace utility, and the crypto market is shifting hard toward real-world value. In 2021, meme coins made up nearly 10% of total crypto trading volume. By 2025, that number has crashed below 1%. Billions have evaporated as investors shift toward AI-driven blockchains, tokenized assets, and projects that actually solve real problems. The market has spoken, and meme coins are the past. You can think of it like walking into a digital carnival. Lights flash, people shout about easy riches, you give a few dollars, and you get a little token with a little dog drawn on it. The pitch is simple: get in, sit back, and you'll ride this coin to the moon. Fast forward a few months, and now the carnival is devoid of people. The lights are gone. The crowd has moved on. Your token that used to be worth hundreds is now worth maybe tens of Shiba. That is the current meme coin landscape. The hype has subsided, a shining past is dwindling, and reality is coming home to roost. This is also not about whether meme coins are going to cease to exist for all eternity. A look at why their story is closing and what it says about our quest for fast cash online. Meme coins started as a joke. Literally, came into existence in 2013 as a journalist for Bitcoin. It was never meant to be serious by its creators. It was meant to make fun of crypto's ridiculous speculation. But irony became prophecy, facilitated by Elon Musk's tweets, Reddit communities, and a legion of new retail investors who turned a joke into dollar bills. By 2021, Dogecoin was a multi-billion-dollar asset. After that came Shiba Inu. There came Pepe, Bonk, and so many others. Thousands of tokens launched overnight. Most of them were absolutely worthless from the get-go, but people were digging deep and doing backflips to convince themselves otherwise. It was a continuation of entertainment, a lottery, and a movement all at the same time. The appeal was obvious. You did not have to know how blockchain or trading worked. You didn't need much money. Buy a million coins for a couple of bucks and dream of turning them into thousands. It seemed possible through the medium of social media. Memes spread faster than facts, stories about instant wealth by influencers. Everyone wanted to be early on the next Dogecoin. At their peak, meme coins pocketed tens of billions in market cap, and for a moment, they were serious money, not just jokes. However, it was all fun and games. The foundation was built upon stand. There was just one critical flaw with meme coins. They were based on attention instead of adoption. At this point, hype was the only thing holding prices up. The money followed the hype wherever it went. There was little else to meme coins besides trade, little else to their ecosystem besides speculation. These did not solve actual problems or provide actual services in the physical world, and they were representations of shared faith, and in crypto, faith fades quickly. Then came the cracks. Investors started asking hard questions. Who owns most of these coins? How are they distributed? What happens if developers disappear? And often, massive amounts of the supply were in the hands of insiders or individual wallets. Small investors lost all when they sold. This is called a rug pull in the crypto world. A particularly dangerous scheme in cryptocurrency they called a rug pull, when the creators of the token artificially inflate the price and then cash out at the top before leaving everyone else with worthless tokens. Rug pulls that drained billions from retail traders hunting memes by 2023. Regulation added another blow. Regulators started cautioning people if the meme coins were not registered, represented a higher risk, and were frequently utilized for scams or market control. Others sheltered privacy and meme coins from an outright ban. Exchanges began delisting them, so the dream of decentralized fun money started hitting legal reality, whereas meme coins were largely untraceable, unregulated, and unpredictable. And that made it dangerous to list these. Even without regulation, however, the very nature of the market began to evolve. Bitcoin and Ethereum reclaimed over 70% of the total cryptographic market value. As traders took their lumps, the fearless speculation that powered meme coins throughout the 2021 frenzy fell by the wayside. The market corrected. No one wanted any jokes. The meme coin darlings fell out of the spotlight, and with that, their oxygen. So, the reality is, most of these meme coins were never going to work. At the peak of their popularity in 2021, frenzied analysts likened them to collectibles, not to investments. They were powered not by fundamental value, but by viral moments, tweets, and TikToks. The data on closer inspection is sobering. Of the thousands of meme coins launched over the past few years, only a few are actively traded today. Everyone else perished silently, no announcements, no refunds, just bailed liquidity. Their websites disappeared, their communities faded away, and their promises evaporated with the market cycle. Not all meme coins are scams, though. A handful, such as Dogecoin, have built strong communities that actually believe in the culture. And while belief can help drive short-term wins, it does not propel sustainable growth. In and of itself, belief can only get a token so far, but without innovation, true world use, or real outreach, it can only go so far. Take Dogecoin, for instance. It briefly topped 70 cents during the last bull run in 2021. By late 2025, it was stuck at 10 cents. This represents an 85% decline from its peak. Shiba Inu took the final 2 downward steps on a similar route, and it used to have a market cap of over $40 billion. And now, it sits at a fraction of that. What is the takeaway from this, you may ask? First of all, hype by itself does not generate value. It can go viral, however, it cannot make it last. Second, technology without trust fails. Sure, meme coins elicit laughter, but there are millions behind that mirth who lost savings because they mistook virality for value. Third, the market always corrects. It's great for products that actually provide solutions to problems and bad for products that only exist to speculate on. The combined market cap of all meme coins together is between $50 to $60 billion today. That may sound like a lot, but few crypto projects consider it. And a lot of that value exists within just 2 or 3 coins. And they are dead or forgotten by thousands more. A symmetry of abandoned punchlines. The party is not over because meme coins failed, it is over because people stopped laughing.